Hello traders, Gary Wagner here. Just after 11 o'clock in Honolulu, 5 o'clock in New York. It is Thursday, 22nd day of June 2017, and this is the Daily Report for Gold and Silver. We do have moderate to strong gains in the precious metals markets. Gold, silver, and palladium. Platinum is trading lower today, but gold effectively closed up about $5.40 higher, closing at $12.5120. The high on the day has been $12.56 with a low of $12.4640. We did send out a special trade alert yesterday recommending that our subscribers go long most active August contract of gold. On today's show, I want to detail the rationale behind the signal as well as what we were looking at, and we will begin to talk about our strategies for protection, meaning our stop, as well as start to lay out some models for our upside target. Silver also closed higher on the day. It traded up about 8 cents higher. Let's go ahead and pull that up to close at $16.51. Net change 13 cents, on the day, with a low of $16.40 and a high of $16.64. So traders, I want to start today's show off by talking about the trade recommendation that I put on yesterday, the patterns that I saw unfolding, the rationale behind it, and the rationale behind our stop placement. Effectively, we sent out a trade recommendation. Market was trading roughly at $12.52 and change. I believe I wrote down $12.5260. At the time, this market had been moving higher, was up about $6-7 on the day, and effectively it, in terms of a candlestick pattern, completed two specific patterns that I felt were worth noting, and both patterns indicate key reversals in the market. The simpler of the two-day patterns can be seen with these two bottom candlesticks here, these small body candlesticks that have very, very similar lows that both rest on the 200-day moving average. In terms of a candlestick identification, this pattern is simply called tweezer bottoms, and they represent these equal lows. These lows don't have to be just the wick. You can have it where the real body of the candle opened or closed at the same area. But that was the first pattern that I identified. And then the larger of the two patterns is simply called tower bottoms. And a tower bottom would really be part and parcel of these four candles for identification purpose. Basically, what you're looking at is the criteria necessary to complete this particular pattern is first, after a defined downtrend, we certainly meet that criteria. You've got typically a large drop, a final drop in the market, and then you'll get a series. It can be 2 or 3 or 4 days in which you have very, very similar lows showing you consolidation and congestion in that area. And that, of course, is completed by the final candle, which needs to be a green candle. The longer, the better. And so, in essence, what you're getting, let's go ahead and redraw this, but in essence, what you're looking at with the tower bottom is this right here. And this is what composes the tower bottom pattern. Now, one other way you can also look at this is this pattern, or this candlestick gathering, so to speak, is very, very similar to a three-river morning star, except that you have really double stars at the bottom rather than a single star. But most importantly, all of this information combined, and the fact that it occurred at the 200-day moving average and that it opened above the 61.8% retracement, all of these patterns combined indicated one thing to me, and that was a high probability for a V or a key reversal in gold pricing. Lastly, I do want to talk about stop placement. Traders, your stop should be just below 1335, and that number and that stop placement is based upon these recent lows, as well as the effective 200-day moving average, which right now sits at 1241. If this market is going to have had a key reversal and is moving to higher ground, it needs to consistently trade above this particular price point. Our stop right in this area should give us some great safety. What I'm looking for is an ascent in pricing. Once we take out, or I should say, if we take out the 50% retracement, at that point we would look to trail the stop higher. And of course, I will send out a special trade alert notifying you to trail your stop higher. In other markets that we follow, a mixed bag in equities, we'll get to that in a second. Dollar in essence unchanged, closing at 97.25. When we look at the Dow Jones Industrial Average, closed off 12 points. I'll put that in the unchanged column. And Standard & Poor's also in the unchanged column, although they're showing red. And then lastly, I'm going to put NASDAQ in the unchanged column on the day, although it has a slight uptick. Of interest, though, is crude oil, because crude oil has just been falling out of bed price-wise. Today, up about 0.6% at 42.79. I have noted that we do have some congestion at current pricing in U.S. equities. Also, the dollar was very, very flat today. So really what I want to look at is crude oil, because crude oil has been in such a defined free fall, moving to lower prices, in effect from about $55 a barrel down to its current pricing just below $43 per barrel. I still believe that there's more room to the downside. I believe that this slight uptick experienced today is probably the offset of positions, getting out of positions. So those that are getting short are going to cover by initiating a long position to cover the short play. I still believe that crude oil will inevitably trade between $40 and $41 a barrel, and I believe it could in fact go lower than that. Traders, as you know, over the last week and a half, we have been looking at the potential for gold to find some sort of support and a bottom based upon the 61.8% retracement, which is 1246, and the 200-day moving average, which was sitting at around 1242. We did get confirmation yesterday, as I explained in the technical studies part of the show. And so therefore, my recommendation is to obviously maintain our current long position in gold, maintain our current stop. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.